Okay, here are the exact steps to pay yourself as a small business owner. Look, this is going to be an important video for all entrepreneurs out there because working for yourself means paying yourself from your business. Hey, I own a business now, but how do I pay myself? So I created this video as a guide on the absolute best way to pay yourself as a small business owner. We're going to be answering 3 questions today. How to pay yourself, how much to pay yourself, and when to pay yourself. And by the end of this video, you will have the knowledge to pay yourself properly and profitably, no matter the size or type of business you have. So let's get into it. Okay, the first thing I want you to know is when to pay yourself. Here's a stat. 90% of businesses fail, and not because they have a bad business idea. 90% of businesses fail because they run out of cash. And yes, you can be profitable and still fail as a business because cash fuels your business like gas fuels a car. And without enough cash staying in your business, you can't perform day-to-day activities, let alone plan for the future. And many business owners make the fatal mistake of pulling cash out of their business too early. I mean, before they can cover expenses, let alone plan for growth. Heck, even Tesla at one point almost ran out of money and was this close to going bankrupt. Elon Musk and Tesla was running out of money. So here's the formula I've used since 2011 that has allowed me to grow a company to be an Inc. 5000 company with over 50 employees and allow me to enjoy the fruits of my labor. The first thing you have to do is leave 3 months of expenses in your bank account. Look, I'm talking actual cash and not accounts receivable. If your customers don't pay you for 3 months, can you survive? If we experience another economic downturn or pandemic, can you survive? The 3 months of reserves acts as a cushion for your business in case of economic downturn or just poor sales. But not only that, that 3 months of expenses that you keep in your bank account gives you peace of mind to know that you can deal with those things and allows you to pivot if necessary. Okay, the second thing I want you to do is to set aside money for your goals. This is one of the things I call an ongoing fund that'll change over time, but it's there for things like marketing, hiring employees, pivoting your business idea, new tools, new tech. This is also one of those things that I want you to have in cash, not accounts receivable, to ensure that your business not only survives but prospers. And lastly, pay yourself with the remainder. Now that your priorities and your business's future is covered, you can pay yourself what's left. This amount will be the excess cash that you can pay out to yourself or to your partners via a dividend based on the equity holdings in the company. Look, as the saying goes, it's not personal, it's business. So you take care of your business first and your business will take care of you. Okay, now that we know when to pay ourselves as a small business owner, let's talk about how to pay ourselves as a small business owner. In general, there are 2 ways to pay yourself, and you're gonna choose either or depending on your business type. The first way to pay yourself is via something called an owner's draw or a dividend. With an owner's draw, you're simply drawing cash from the business's profits to your personal bank account. And this is something you can do on an as needed basis. And you are able to draw up to the amount you put into the company, something called your owner's equity. And while you don't have to pay taxes immediately when you do an owner's draw, you should be setting funds aside for those taxes and be budgeting for that tax bill that you know will come, because trust me, it always does. The owner's draw is the most popular form of payment amongst small business owners. The IRS sees sole proprietors, partners, and LLCs as self-employed and basically not paid with regular wages. And if your company is an S-Corp, you have the option of taking the owner's draw on top of your regular salary. Now, the second way to pay yourself is with a salary. With a salary, aka W-2 wages, you are paid on a recurring basis like any other employee. And therefore, taxes are taken from your check and paid to state and federal governments. This form of payment is required if you're a corporation, an S-Corp, or an LLC that is choosing to be taxed as a corporation. And you should note that if you own a corporation and are in the day-to-day activities, then you must have a salary, and that salary must be reasonable. meaning that even as an owner, your salary should be reasonable to someone in your position. In other words, you can't pay yourself $1 in salary and then decide to take the rest in dividends. So this begs the question, should you pay yourself via an owner's draw or a salary? Well, sole proprietors, partnerships, and LLCs are taxed based on profits, regardless of whether cash is distributed or not. So with that in mind, taxes would generally not be a reason to choose a salary as your form of payment, unless you want taxes taken out now instead of later and want to deal with the headache of payroll. But remember, if you're an S-Corp, a corporation, or an LLC choosing to be taxed as a corporation, you do have to take a salary. But whether you choose to take an owner's draw or a salary, I want you to make sure that you're budgeting to replace yourself and your salary in your margins. Unless you plan to work in your business until the day you die, you want to make sure that your business remains profitable with you out of the picture. Now, here's a quick note on reasonable compensation. As mentioned, if you're structured as an S-Corp, a C-Corp, or LLC taxed as a corporation, then you must be paid with a salary, and that salary must be reasonable. So you may be wondering, what is considered a reasonable salary? Well, here are a few things I want you to consider. First, the duties performed by you. Second, the volume of business that you handle. Third, the character and amount of your responsibility, the complexities of your business, the amount of time required, the cost of living required, the pay compared to the gross profits and net income of the business, and your specific policy regarding pay. Now, let's plan for success. Many entrepreneurs won't be able to take money out of their business in the early stages. But once you have good footing and reasonable expectations of profit consistently, start paying yourself, even if it's a small amount. You want to make sure that you can pay yourself profitably and it's within your margins. Also remember that taxes are to be paid quarterly when businesses make money. So plan to pay taxes. Your accountant or your CPA should be able to help you and remind you of this. And also most payroll providers also remind you of quarterly taxes. The more you plan, the more you succeed. And by watching this video, you are already on your way to success. So as a recap, we discussed that you should have 3 months of operating expenses in cash in your bank account. You should set aside money for your future goals. And lastly, pay yourself with the rest. You also have 2 options of paying yourself, with an owner's draw or with salary. An owner's draw is common among sole proprietors, LLCs, and partnerships. And paying yourself a salary is a legal requirement for S-Corps, C-Corps, and LLCs choosing to be taxed as a corporation. I'm going to place a few videos on the screen I think you should watch next. But before I do, go ahead and hit that like button for me. It helps other entrepreneurs find this video on YouTube and heck, helps me out in the channel. And subscribe to the channel for more information that helps you save on taxes and build your business. I'm Karan from Life Accounting, and I'll see you in the next video.